Welcome, everybody. This is the Thursday evening webinar. If you're here to learn about trading the futures instruments, trading using the Viper trading system, you are absolutely in the right place. First, we got to knock out our standard disclaimer. Then we can get over to some charts and start looking at making some money, which is why we do this, right? All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know you trade at your own sole discretion. All right, let's get over to a crude oil chart. I know we have a lot of people visiting here, so we're having kind of a little bit of a summer open house, if you will, where people can come and come to the live room, come to the webinars, and sort of kick the tires a little bit on what we do here. So I'm going to take just a couple of minutes here to quickly identify what you're looking at. So this is a chart, and we pretty much always have many years trade the 4-range chart. We prefer this over time-based bars, which tend to distort price action. If I was to put a 1 or 2 or 3 or 5 minute chart up here, it would look very different than the range bars, which tend to be a little more orderly, because once 4 ticks forms, then it forms another bar. We are connected to a data source from our broker, and we get the feed. If we get the feed from on these instruments. Now, crude oil is $10 a tick. It's crude oil futures, so each tick of movement is $10. We also trade gold, GC, gold futures. We'll look at a gold chart in a little bit. That's also $10 a tick, so each tick of movement is $10. Now, in the room, of course, if you visited the live room, you know that we trade YM in there. That's the mini Dow. And the Russell futures, RTY. Each tick of movement on those is $5, and we're on the September contracts. That's the current front month. We used to have NASDAQ, the E-mini NASDAQ futures in there, also $5 a tick. We took it out because we call it Spazzy Nazi. There is a lot of algorithms that run against it that push it all over the place. We can still look at a chart if you want to. And then, of course, there's the E-mini S&P. That's $12.50 a tick. We actually trade a 2 range on that one because the movement is so slow. It doesn't move. It moves like a third of what everything else does, so it's a little harder to see movement when it moves. Now, the raw data comes into this chart, and it is rendered on the chart using our indicators. The indicators are as follows. It's the background colors, red, green, and transitional colors. You can see here. When a market is choppy, it kind of looks a little bit like a striped shirt. See right in here, it was kind of going up a little bit and then down and sideways and all manner of things, and that you get this sort of striped shirt look effect when it's choppy. When you're in a pronounced trend, one direction or another, it tends to stay that color for some period of time. For instance, here this was an uptrend, so the background is going to be predominantly green with predominantly blue bars. Likewise, in a sell-off, the background is going to be red with mainly red bars, and the bands will be stair-stepping down or stair-stepping up in the case of the uptrend. The other things on here, of course, are the power meters. These are the 4 trends on the chart at any given time. And then we have this notion of predictors, which are real-time swing levels in real time, so you can toggle those on and off like such. So that's the basics of it. Now, how do we trade? And this, in keeping with the theme tonight of the webinar, which is patience, wait for the trade to come to you. So what are we talking about, patience? Well, we are considered what you would say in the trading vernacular, if you will, are retracement or pullback traders. Let's look at some examples of trades, and this is how quickly you can pick this up. In an uptrend, the thrusting motion of the market is obviously up. Let me blow these trends up quite a bit so you can really get a sense of how this works, just at a very high level, so you conceptually understand what we're doing. All right, so in an uptrend, the thrusting part of the move is up, hence the uptrend. And the retracement would be in the other direction, which would be pulling back in what we call to support. It is these retracements on which we take trades. Now, there are three general areas where we like to take trades. I'll show all three examples. The primary one in an uptrend is when a market pulls back and sits on or near this mid band here. So this is we got 4 bands. There's 8 total bands. 1, 2, 3, 4, 5, 6, 7, 8. And right in the middle is this big fat middle band line. We call it the mid band, right? We love trades to come right into there. So you get a thrust, you get a bounce, you get another thrust. You can see all the way up. I'm just talking conceptually now. I'm not actually getting into the mechanics of actually taking the trade. I'm just having you visualize how we trade markets. We are pullback or retracement traders. So in an uptrend, you're buying support. You're taking longs only in a strong, powerful uptrend like this. Okay, you get the idea. I'm not going to do them all here. You see how this works. Here's another pullback. These are all long trades. Now, what happens is after a big move up, markets can do a couple of things. They can go sideways. They can reverse with a V or a W type, or a double top, double bottom kind of situation. And let me ask a question like this. Looking over here, we can see that the trend direction changed from up to down. Now I'm going to ask a couple of questions, and I'm going to give you as a multiple choice question. And I'm going to ask it in such a way that you're going to help us, everybody collectively here. And we got a big turnout here tonight. Welcome. If you came in late, we're just sort of, we're a few minutes into it. We're just kind of conceptually going through some things. I'm going to ask you where you think the trend changed on crude from up to down. And I'm going to give you 4 spots, okay? And they're going to be A, B, C, D, E. No, was it A, B, C, D? And when you think you know when the trend changed from down to up, you type in a letter, okay? All right, the first place is here. This is going to be A. This is going to be B right here. This is going to be C right here. And the answer D, the letter D, is going to be right here. I'm only going to give you 5 seconds. You got to look at this chart and you tell the team, you cast your vote on when you feel that the trend changed from up to down. I'll help you out. It did change. Okay, so that's the given part. Question is where? A, point B, point C, or point D? Where in this little collection of swings and movement did the trend change from up to down? A, B, C, or D? You've got 4 seconds left to cast your vote. I mean, we see it sold off. So, I mean, yeah, it did change. The background color changed. Bars are predominantly red. Background's predominantly red. Excuse me. 2 seconds. Cast your vote. A, B, C, or D? Where was the trend change official? All right, time's up. Now, that was a little bit of a trick question in the fact that I want to say something that I think is going to help you visualize trend changes and how to be patient and how you can trade it. Because a lot of traders get anxious when this happens. Things are changing. You were used to the up move. You were buying support. You're making money in the uptrend. And everything's starting to get funky over here and it starts to throw you off. I understand that. I get it. I went through it myself. The fact of the matter is markets leave you what are called breadcrumbs. What's a breadcrumb? They're little clues. There's little clues that are happening here along the way to let you know, sort of a little nudge, nudge, wink, wink, heads up, something's going on here. Now, what would they be? Let me put a couple arrows. What is different about this and these two swings right here versus what was going on all the way over here all morning long? All morning long it was doing this, right? And then all of a sudden, here we are, and it starts doing this. What's different about this versus over here? This. What's different here? Take a look at it. Look at the chart. What's different than to the left of it? It's lower highs, right? What is that clue telling you? What is this clue telling you? What is it telling you when it does this? Does this thrust here off the mid-band bounce look like, does that thrust look like this thrust, or are they different? Yeah, you're running out of momentum. I mean, theoretically, if the uptrend was continue, this arrow should look more like this, right? Up to fresh highs for uptrend continuation, but it didn't do that. So breadcrumb number one. Now, just to be clear, the answer was not A. This is not indicative of a trend. Because it didn't get to the high is not a trend change. You know that, right? So it's running out of gas here. This is a legitimate long trade off this is the last long trade in the move right here. It was a legitimate, and you got a scalp off, so it was still a good trade. All right. Now, there was actually additional points in here, but I didn't want to confuse the matter. But you can see here that this is the first time with this pullback here in all these retracements, all the way over here, that the mid-band was broken, yes? It's breadcrumb number two. Showing signs of weakness, right? Heads up, wink, wink, nudge, nudge, possible trend change afoot. So our spidey sense is up. We're starting to say, something's going on here. Market's looking a little weaker. Now, when this swing forms right here, it becomes clear and evident that this market just cannot even get back up to here. It's running out of gas. So you didn't break the top here. You broke support here with the swing, more indicative of some weakness, and you're running out of gas at the mid-band. You can't even get past there. Now you get a move down like this, down to point C. Now, that changes the background to red, and now you have broken several support levels. Not only did you not break the mid-band, barely you kissed it and rolled over, but this swing was broken right here, which was a lower low, lower high, lower low, lower high, lower low. Now we have 1, 2, 3, 4 points to connect. Arguably, a lot of people typed in C. That's kind of on the cusp. That this is, so you really have two things. You can say that this thrust down breaking support with the third 1, 2, 3, 4 lower high, lower low, that this would be the actual trend change itself, and I could buy into that. So, but the letter D, which is this swing right here, is the actual short trade entry. So if you said C or D, I'd give you a check mark and a gold star for that. Anywhere C or D. Because A and B in this swing here were too early to know for sure. And here's why I say that. Go back in real time. So in real time, the market would have looked like this. Right? See it? In many cases, in some cases, we're going to look at some in just a minute, where this can just simply be a deep retracement, and sometimes it'll pull down into here and continue the trend up. Anywhere kind of at or around line 2. So here we have line 2 above the second box, and line 6 in the mid-band. So when you think of our trading system, it's healthy to think of it as like a framework where line 2, mid-band, and line 6 feature prominently in our decision making, not only on trade entry, but trail stops as well. And I'll get into more detail on how we use each one of those levels. But suffice it to say, what I'm saying over here is that it's quite possible that you could get down into here on a retracement. You could still conceivably be in an uptrend. So breaking the support at the midband was not indicative of a trend change. Now, let's go ahead and walk forward as if we're recreating the rest of the day on crude. Now we see she breaks support, comes down to a fresh swing, right? See, breaks it. Bars are red, background turns red. We have a fourth lower high of all the swings now. We got 1, 2, 3, fourth point of lower high, lower low. Now let's discuss trade entry and this whole notion of patience. Many of you, and I understand this, I used to do it, all new and intermediate traders it happens to them, understandably so, where you see some weakness in the market. Maybe you made note of the fact that it didn't break up and it's stinking around the mid-band, and you wanted a short to roll over, but you missed it, and now you're kicking yourself, and the thing's starting to drop, and it's dropping, and now it gets all the way down to here. And you say to yourself, dang, that thing is going down. It's going down. I better jump on the shorty market or I'm going to miss a 100-tick drop. And so you hit the market short button only to be filled like right there. Like on the apex of the drop, you get filled short with a market short button deal, only to find out that the thing starts retracing right up in your face. How many of you get stuck with this problem right here? You wait until you're convinced, but banga, I better get in, I'm going to miss it, only to come up and stop you out. I know it happens to some of you. It used to happen to me all the time. It's like the market knows when I get in because then it's going to go against me. So what I'm telling you is the reason that's happening to you is because you are buying and selling thrust moves. You're getting in on the thrusting part of the move. And so what we have to do to break that cycle is say no to, put a buster sign on here, no buying and selling thrust moves. A couple of you are saying that's me. I do that all the time. Hey, no, I understand it. No, and I understand the psychology behind it. I did that. I got beat up for years doing that. Mea culpa, truth be told, that's true. I just got whack-a-mole about the head and face. I would just wait. Now I'm convinced. Market short, boomba, filled here, only to get a full stop out when the thing comes up here. And as you're getting stopped out with a full stop out, this is where you should actually be getting in. Isn't that the ironic twist about the whole thing? See it? Now, let me clean up this chart so I can go through sort of a little bit of the mechanics of trade entry. Is there any questions about what I've shown so far? Any questions about what I've shown so far? Because I'm gonna erase everything from this chart and start clean so you can see this trade. All right, adios, muchacho. There we go. Now, in the case of, remember what I said a minute ago? The lines that feature prominent in our decision making are line 2, mid-band, and line 6, right? Now, in the case of a short, we have a minimum requirement of retracement to get in, and it is as follows. It has to close above the stealth line. See the red snaky-looking stealth line? And it has to close above line 2. We prefer it to get to the mid-band, but it doesn't often do that. But what I'm saying is if you were to think of a little bit of a zone here in terms of minimum retracement in a trend, it has to close at least above here. That's the lower spot of our trade. Mid-band would be more like this. And deep retracements on the short side would look like this. And it's quite possible that if it even got up this high, the bars might actually turn blue. But that's not a trend change. We'll look at that in a little bit. Now, do you notice how that we come up just shy of the mid-band, and we have a little sequence of bars that looks something like this? You've got 1, 2, 3, 4, reversal candle, 5, 6. Now we have this notion of object trader with a region box, and so you take your region box and you engulf these candles like such. You can engulf them like that, or you can engulf them like that. In the case of the downtrend, you're going to enable shorts only. There's a little panel here where you select region. It pops it up right here. You size it, you enable it, and you put short only on. Okay? If you drew it as shown, what happens is this, is that you get fill short on this button, or this close of this candle right here. And what physically happens with Object Trader, and that's why it's a semi-automated tool, it's perfect for this application, is you fires a market order short on the close of that bar. Let's suppose you had a 12 tick initial stop, so that would be 77, 65 plus 77, so your initial stop on the trade is up here, 12 ticks above your entry. And we usually like to trade 2 contracts. The reason for that is as follows. We like to have what's called a scalper or short range target. So for instance, in the live room, you might hear something like, okay, it's gone 10 ticks, take your scalp target. So what the heck are we talking about? Take your scalp target. What is that? You're supposed to scalp somebody's hair or something? What is that supposed to mean? All right, so here's what we're going to go. You're filled at 65 short. You have your first contract's target is 10 ticks below the entry at 55. So contract number 1 would be filled right here. Now you're up 10 ticks on what's called one lot. Your 2 contract stop is sitting here, 12 ticks above your entry. Now, you don't have to worry about all this because OT's taking care of this. Object Trader, the tool, we built this tool to do this. It's OCO. So once this scalp target is taken out, the 10-tick scalpy is taken out and filled, it takes 1 stop off of here, and now you have 1 because you only have 1 contract left, right? And the immediate thing you do is you come down and you get it within 2 ticks of your entry. That's called a free trade, meaning that if something happened and reversed, you'd still make money. And then you can program Object Trader to follow the market down. Now, I'm not going to get in detail as to the trail stops, because trail stops are a whole other subject in and of themselves. They're kind of part art, part science. And depending on how tight or loose you have your stops, what I'm talking about specifically is that if you use stealth and line 2 as a stop tightly, it actually stopped you out there, but you could have gotten back in on a rollover. If you had a little bit looser stops, which I do, I tend to go between here and the midband. I leave them a little loose because you always get sometimes bars that do this, and they choke you out of a 100-tick move, and it drops another 80 ticks, and you miss it. I hate that. But what you could have done was re-entered on here. If you had, what I'm saying is, if you had a tight stop where you were trailing it down using stealth and line 2, the close of one of these bars actually got you out right there. See it? And you would have to re-enter and rebox and get in here. See that? It met the criteria, right? Close above line stealth, close above line 2, reversal candle, get back in. So this is actually a short re-entry. All right, so now that we're all experts on trading the short side, let's do a quick little exercise and see how much you grasped the concept of taking trades. Okay. So what I'm going to do is I'm going to clean this chart off again because I don't see any questions. Stand by. And I'm going to go back to the last trade that we looked at on the chart, which is right here. And now I'm going to turn the chart on. And I'm going to advance this chart, and you're going to type in the letter T, or S for short, when you see another short trade entry. Okay? And don't type it in now, because I haven't started yet. Okay? All right? Don't type it in just yet. I'm going to start advancing the chart like we're looking at it together in real time. Let's pretend this is tomorrow morning, and you're looking at crude, and you want to take some trades, right? You tell me when you see it, you type in an S or a T when you think the trade is set up and you're ready to take it. Ready? Okay, here we go. Advancing the chart. Advancing the chart. Advancing the chart. Now, if you notice, this was overnight. This is the beginning of the European session. So, unless you're a night owl, you probably wouldn't have been trading this. But let's say you're a night owl and you're trading the European session. Okay, so this is about 1 o'clock in the morning right here. 1:09, actually. Okay. Okay, you're still at 1:09 a.m. in the European session here. Everybody remember our criteria for entry, yes? Everybody remember our criteria for entry. Let me blow things up so the candles are nice and big. There you go, that's a lot better. I like that. Maybe you're sleepy. Maybe you woke up and you got yourself a cup of espresso. And you're just sipping on it, thinking about what you're going to do with crude oil here. And you're looking at it, and suddenly you perked up. Your dog came in, started chewing on your leg a little bit, waking you up. All right, I'm going to stop it right there. All right, I got to say some serious kudos to most of you in the room here tonight. You team members got it. Some early birds typed in T and S's for short when these bars started to form right here. And that was correct. Did this meet the criteria for trade entry? Yes. Close above stealth. Close above, excuse me, line 2. I would call you early adopters. Now, did you get short if you put a box? Probably not. Does anybody hear that noise? They're working on the yard next door. Anybody hear that? No? You don't hear it? Okay, cool. I won't close the window. I'll leave it alone. Now, some of you typed in T's and S's when these bars formed, and that was also correct. I wouldn't call you late adopters, but I would say that, you're. Hold on a second, please. My apologies. My neighbors have a landscaping crew that comes by every Thursday night at 5:30 without fail. Firing up the... Anyway, whatever. Let me close the windows. You should be okay. Are you overseas in Beirut? Are they shelling your house? No, that's landscaping the neighbor's yard. It happens every Thursday at 5:30. It drives me nuts. Perfect timing, right? All right, so yeah, okay, so you see, we meet the criteria. We're closing above stealth. We're closing above line 2. And you would be filled short on this bar right here. Good. All right, let's do an exercise to the long side. Let's see if you can see the long trades. Okay? Okay, let's look at the long side of the market. Let's see if you can pick out trades on the long side. Let's do this morning on crude coming into the pit open. Are you ready? No, I see some comments. Yeah, most of you got that. Okay, good. You understand the concept of where we get in these trades, right? Good. So we have shallow retracement, mid-band retracement, deep retracement, both on the short side and the long side. Okay? All right, now we're coming up to the crude pit open on today. And you tell me, you type in L for long. I'll help you out. It's a long trade. I'll help you out. It's a long trade. Or T for meaning trade entry. You ready? It's a long trade. Here we go. Sorry, Greg. I see your question. We're in the interest of time. We're going to kind of move forward a little bit. Do me a favor when we come back at the end. If you want to see that, we'll circle back on that one. Okay. Here we go. Here we go. All right, I'm moving forward. We're at 5:32. crude pit's getting ready to open. 5:52. Crude pit opening. 6 a.m. Pacific. The room is open. We are live. Gary's in the room. You're in the room. You've got your charts up. Your charts are right in front of you. You're looking at the crude. You're wanting to trade crude. There's 6 a.m. Pit's open. Okay, the trend is up, right? I'm helping you out here. We're going to thrust up. Background is green. Stair stepping up. Bars are predominantly blue. 601 coming up. 601 coming up. Blowing up the bars. 601. Okay, I'm going to stop it right there. All right, I'm going to give, there's a handful of you, looks like to be about a dozen or so, that got it. Some of you started typing in T's as early as these bars right here, which is true, and that's good, which never filled. Obviously, you see that. You put a box around those, you never got filled. Put a box around here, you never got filled. Many of you typed in T's when these bars formed down here. See these three little bars down here? We're just wicked under the midband. In fact, I think Gary was calling a buy in the room. Anybody remember that? This would have been right at 6:01-ish. Room opens at 5:55, so he actually opened the room right here. Somewhere right in here. So you were up. You were in that room about 5-6 minutes, and you had your first trade. Anybody take that? That long? Everybody see it, right? Everybody sees this trade, right? This is the long trade right here. Crude oil, 601. 535. I wouldn't really call this, you were still doing sort of an ABC pattern here. While this met the criteria, it never broke this swing. So here, this is what you get sometimes. A, B, kind of a protracted B, actually, if you want to really say it that way. And then you have C. So this is this sort of an extended retracement that goes just below the midband, and your actual trade entry is down here. So to be clear, what I'm saying is that if you boxed it in over here, you said, well, okay, hold on, wait a minute, Charles. You know, this meets the criteria. You're closing below stealth, and you're closing below line 6, so isn't this a trade entry? Well, in terms of check mark yes, I'm not disputing that. However, you never got filled. See this bar? See the swings here? That never got broken. You never got filled. So technically, from a technical point of view, yes, you are correct. That is the minimum amount of retracement to take along. Would you have been filled? Probably not. In a case like this where you're not filled and it continues to retrace, you simply eliminate that box and look for reentry. You wait for it to come down all the way to your sweet spot. Good. Everybody getting the hang of that? Are you getting the hang of it? What do you think? You want to do one more? Let's do one more, and then we'll go to a different instrument, okay? All right, I'm going to advance this chart through 7 a.m. Pacific, and we're going to do this exercise one more time. An L or a T, either one. It's going to be a long trade. And you type in where you think you see a trade, okay? Here we go. We're going to advance the chart again. Pretend we're watching this tomorrow morning in real time and how you would trade it. Okay? No, don't type long yet, Bill. I haven't even started yet. Let me start advancing the chart. Just give me a second, okay? Hang tight. There's no trade yet. All right. Yeah. Okay. Here we go. All right. So let's pretend you were a late bird and you missed this. Darn, I missed that. I see the trade set up. Darn, and Gary's long. Everybody in the room is long, and they're all, it's going up. So now you got to wait, right? You got to wait. So let's go. Let's go. Here we go. Let's see. Now you're at 604. It's moving up very precipitously. 606. 607. Pushing higher, taking out swings. Then now you're at 614. 615. 6:20, 20 minutes into the trade. Okay, 6:21. Yeah, the train left the station big time, Paul. We'll circle back and analyze how much that trade made after we're done. Let's finish the exercise here, and we'll circle back on that to talk about how much money it made on that trade right there. Okay, all right, good. Still moving up, 6:26. In that trade about 25 minutes now. Pushing higher, pushing higher. Still going. 6:33. 6:34. And speed it up, speed it up, speed it up. 6:42. Heck of a trade, wasn't it? All right, here we go. Now we're at 6:49. Just blow the chart back up a little, get a little, blow it back up. 6:50. 6:52. Remember what I said about the lines? Anybody remember what I said about the lines? Hopefully you didn't. I hear some thumping of heads hitting the tables. Don't fall asleep. Market's moving. Tomorrow morning, market's moving. Are you sleeping or are you trading it? What are you doing? 6:55. 6:57. All right, I'm going to stop it right there. No, don't type in a T now. You're too late. What'd I say earlier? You might be the thrust traders we talked about earlier. No, you missed it. All right, now kudos to the people who typed in a T right here. This was the earlier adopters. You noticed the fact that this went perfectly to the midband and sat right here. So if you typed in a T there, you were absolutely correct. Did you get filled long? No. Okay. What did we say about line 2 in an uptrend? Anybody remember? Line 2 in an uptrend, that's considered a deep retracement. Okay, you have shallow, which it might have been a couple of you that typed in T's when it formed here, and that technically was true too. That is actually, that met the criteria. Close below stealth, check. Close below line 2, check 2. This is actually a trade entry here. If you typed in a T there, that was correct. You never got filled. The box, it just kept descending. And there was another entry here. The real entry, and Gary called this live in the room, I distinctly remember this, was down here when it was Wiccan line 2. This was the bounce you wanted. Now, if you missed that and you typed in a T here, where it paused right around the midband, almost where this was, either here or here, for entry on another region box or limit orders, if you choose to get in that way. Limit orders are where you right-click and you have Chart Trader and you put a buy order, in this case a buy. This is line 2 down here, Greg. Line 2, line 6. 2 is the red thin one at the bottom on the top of the second box. Here's our bands. Band 1, band 2, line 2, band 3, band 4, mid band, band 5, band 6, line 6, 7, and 8. Okay? Yeah, so if you typed in a T here, that was correct. You were not filled. A T here, this is correct. It meets the criteria. It's at the midband. Correct, not filled. Down here is correct. At line 2, you definitely got long on one of those bars right there. And the late birds, either here, like this, with a break up through the midband long, or as much as that right there. Yeah. Well, maybe I transposed that. Just to be clear, so we're not all confused about it, that is line 2 right there. Red, thin line 2. Band 1, band 2, line 2. So if I accidentally say line 6, then you can give me a little spank and say that's line 2. And this is line 6. Band 5, mid-band, band 5, band 6, line 6, band 7, band 8. All right? Good. Okay, what do we want to see next? How about the Russell? Anybody want to see some equity trades? Roosty Bird, Russell. Any Russell traders here? Man, I love the Russell. The Russell is my best friend. I'm getting hitched to the Russell, and I'm moving to Vegas. Gonna have a. Let me open up these windows again here. Get some air in this place. It's not. You know what? I'll invite everybody to a good Elvis wedding. What do you think? That sound like fun? Elvis wedding in Vegas. Lewis says yes, I'll be there. Nothing like a good Elvis wedding, huh? Take some videos. I now pronounce you man and wife. All right, let's get the Russell up here. I want to do a similar exercise with the Russell. Let's look at some trades. Now, I'm going to make this tougher. I got to tell you something. Those oil trades were lobbed up to you. Oh, by the way, how much money did those make? Anybody? How much money did these trades make? Before we get off this chart, let's come back here real quick. Oh, let me come back here, Dave. Okay, here's let's talk about the money, and then I'll answer Dave's question. Yeah. Okay. So. By the way, just to be clear, I saw a couple of people, and I didn't stop to correct it. But just to circle back on this one right here, so we're just all on the same page here. Did this area right here, did this retracement meet the minimum criteria for long trade entry right here? Yes or no? Right here. Does that meet our criteria? Check mark 1, check mark 2, yes or no? A Y or an N? How about here? Does this do it? This one here? I think there was 1 or 2 T's or L's that came in on there, and I forgot to circle back and correct that. Does that meet it? No. There's no maybe here. No, absolutely not. This does not close below stealth or line 6. Neither of these. Any of these. None of them do. None of these pullbacks. Not one of them. Not even here. This is not deep enough. This is too shallow. Now, you might say, well, Charles, can I get in? Look, your thing ran another 80 ticks. Well, true. That was because this was an unusually large move on oil. You don't normally get this, okay? There's lots of cases where you could buy in right here, and this turns out to be the top, and the thing flips and tanks 50 ticks in your face. Okay, it's got to pull back deeper. It's got to get into here minimum, preferably the midband. All right, let's say hypothetically, let's say you got filled at, let's use a round number, 67 even. Okay, it might have been a little higher, might have been a little lower. Let's make it. I don't have to break out the gonculator. Let's just say 67, and you got stopped out at I don't know, 60, 68, 30, 36. That's 136 ticks. So if you put one contract on there, how much money did you make? One contract. You bought in at the bottom and you got out at the top. So we have a CL long plus 136 ticks. How much is crude worth a tick? So if I put one lot, which means one contract, equals, I'm going to put a dollar sign. How much money is that one trade worth? It's not $10 a tick, right? $10 a tick. 10 times that is $1,360. Yes? If you put 2 contracts on and you let it go all the way up, you would have made twice that, which is $27.20. Not a bad morning. What do you think? Yep. Now this deep retrace, look what that thing turned into. Let's just come back over here. So let's suppose you got the late entry. Okay, you didn't get in until it closed above. Let's use 30. Let's just say 30. Hold on a second. And you got your stop, your trail stop got taken out at I don't know, 70-ish, something like that up here. So where'd you get filled? 30 to 70, 40 ticks. $400 on one lot. That doesn't look like much. That looks like just a little pop or a move. But 40 ticks at 10, one lot here is another $400. You could have missed this whole trade here, put 2 lot on here and made $800. Babanga. And that trade lasted from right around 7 to 7:06. $800 on 2 lot in 6 minutes. I will take that all day long. Thank you very much. Put the C notes right into my trading account. Thank you very much. I know I'm sort of kidding around, but I'm actually very serious about that. That's how you make money trading futures. Let's go look at the Russell. Russell is a nice instrument in the fact that you get some pretty good movement here. And it's not as wild as NASDAQ, and it doesn't have the deep, the fluctuations you get with YM, and it's faster and moves more than ES. That's why I like the Russell. So it's still, in the futures world, it's still kind of a little bit of as far as the CME group is concerned in Chicago. So quick story on the Russell. Some of you might remember this. For years and years and years, the Russell was traded on the ICE exchange. It was under the symbol TF. You had to pay, like, I don't know, it was $110 or something like that for the data feed, which was a pain, and it was $10 a tick. Movement was sporadic. Russell was just kind of a weird, dirty dog that we kept in the room just because we felt sorry for it. Okay? But a little over a year ago, they moved the Russell to the CME group, so it comes through the same data feed, the CME data feed, so we don't have to pay extra for it. It went down to $5 a tick, so they cut the risk in half. And the movement is super smooth. Why do you think the movement is so smooth on this? Any ideas versus the other ones? Any ideas? Why do we think it's so smooth? What would be different with this versus other instruments right now? Less algorithmic trading, lower volume. That's right, lower volume. It's still kind of new. It's a baby. There's not enough volume to pump the algos in on it, okay? So what am I talking about? We'll look at these trades in a second, but let me explain what's going on there, okay? Most of you know like 80+% of all trades are computerized algorithms, right? It's not people like you and me. I've heard the numbers as high as 85 plus, pushing 90%. We are the little, we're the little scalpy fish on the back of the huge blue whale. What are those little things sort of attach on the back and just sort of ride along? Okay, the algos with the big banks are the big blue whale. And we're the little plankton that clings onto the back. Do you feel like plankton? I know sometimes I do. So here's what's going on. Barnacles. Okay, we could be barnacles. So here's a CME group. You might want to bookmark this if you're new to this. This is kind of the home for futures trading. You can see the ag products, energy. Here's crude right here, September front month. And here's your interest rate. Here's your bonds over here. FX. This is the Aussie. Here's the Canadian. These are all futures. This is sort of the futures equivalent of the Forex market. Euros right here. Here's your gold. This is your metals, precious metals, silver, etc. Anyway, your equities are right here. Now, this is kind of a microcosm of how this really works. Can you see that there's 13,000 contracts over in the past couple hours since they reopened the market? Now, let's take a look at EMD and Russell. Here's Russell right here. Now, during the day, go in there after the market's been open for an hour or two and take a look at this. This is probably going to be somewhere in the neighborhood of 500,000 to 800,000. This trades anywhere from 1 million, 1.5 million, 2 million contracts a day. So, the thing about ES is you can scale it. You can throw 50 or 100 contracts on it. It'll just gobble it up. Nom, nom, nom. Thank you. Give me some more. Whereas the bots, the algorithms aren't paying any attention to Russell. There's just no volume on it. If you threw 100 contracts on the Russell, you'd probably get 10 ticks of slippage. there's no liquidity to suck it up. That's why the bots are running on these other equities. Anyway, back over here, I'm going to do this a little bit differently. I'm going to say between, I'm going to put a line on the, some vertical lines on the Russell. First one is going to be here. And I'm going to put a number, let's do another one over here. And I'm going to give you 10 seconds for this, maybe 15 seconds. I'll give you a little bit more time. So this is basically from just before 7 a.m. today on the Russell. And over here, you're just shy of 10 o'clock in the morning. How many long trades set up on the Russell? The trend was up, so I'll help you out. It's long trades. Count the long trades, and when you have a total, go ahead and put it into the chat box. Counting long trades on the Russell. And you remember our criteria for entry, right? So pullbacks in an uptrend are long trade entries. Let me start counting myself, okay? Okay, I got my number. Look at the chart. I'll give you another 9 seconds. Counting long trades on the Russell through the course of the whole morning here to about 3 hour span. Counting long trades. Ooh, big swing in numbers. Woo! All right, 5 seconds left. Type in your number, counting longs on Roosty Bird from this morning. Where would you be getting in based on our criteria for minimum, maximum, mid entries? Long. 4 seconds, get your number in, cast your vote. Wild swinging numbers here. It's unbelievable. Excuse me, in just a second, I'll tell you what everybody's numbers are coming in at. Pretty cool. Okay, Walter, I see your numbers. Late Bird coming in there. Byron, Michael, Paul, Dennis, Roger, Bill. Okay, anybody else squeaking in? 2 seconds. Counting long trades. Okay, time is up. Now, there are wild swings in numbers. There's some people that only put in like 3 or 4. I can tell you that there's a lot more than 3 or 4 on here. Now, there were some of you that put in 10 or more. I don't know if there's quite that many. Let's start counting together. Starting over here. How many of you said that would say that either here, well, no, let's go like that. That would be long trade number 1. Okay? Long trade number 1. So here's our thrust from long trade number 1. It was quite the winner. Winner, winner, chicken dinner. Stopped out right there. That's a very nice trade. We'll circle back and talk about how much money that made. Now, you could argue and make the case that this was a setup right here. I would agree with you. One of 2 possibilities happened here. If you had a tight box at the midband like this, you might have got filled and then stopped out of the trade. And then if you said that there was another trade entry down here right on line 2, that was correct. So from a technical point of view, this was one entry that didn't work out. If you had the box slightly larger, maybe you didn't get filled. Let me circle back and ask a question. I'm going to blow this up. In the future, if you enter a trade on a little bit of a head fake out of your box like this, and you immediately see it pulls back in the box against you, do you have to wait till it comes all the way down here and take a full stop out? What can you do in this situation to resolve it and avoid a full stop out? Let's say it happens to you tomorrow. You get sucked into a sort of a little bit of a head fake. Maybe the box was a little too tight. Maybe you had a limit order that was maybe too tighter than it should have been. Whatever the reason is, you're in the trade and it's pulling against you. Good. Hit the close button. So what I'm saying is this. let's run the scenario so you're prepared to deal with this, because it's going to happen. Okay, you're going to get popped for some losses. Every single trade is not going to make $1 million. That's just not how it works. You get popped in here like this on a market order from Object Trader or a limit order. Somehow you're filled here long, right? Now, almost immediately, it pulls against you and dinks around in the box right here. It's dinking around in the box right here, above and below the midband. Now, you're only down a few ticks. Okay, let's look at this here. So hypothetically, you're filled at 96.30 and you're dinking around 95.70. Here, you're only down maybe 5, 6 ticks, 5, 6, 7 ticks. So dollar-wise, if one lot, you're only down around $30, plus or minus $30. Now, if you have a 12-tick stop or higher, it came all the way down into here and nicked it. In fact, the 12-tick probably got taken out of it. On 2 lot, that's 120. On 1 lot, that's 60. Now, would you rather have a $30 loss or a $60 or $120 loss? Yeah, get out. So, and I want to dispel a myth that some traders get sucked into, and I know I used to do it too. That's how I know it. Psychologically, it's called a hope trade. Here's how a hope trade goes. You're filled long on the close of that bar. It pulls against you. Your gut is not feeling good about it because you're upside down and you see that negative P&L. And as this is happening, here's what's going through your head. When it's sitting in that box like that, it's going to go back up. I know it is. I just got in too early. It's going to hold the mid-band. It's going up. You're feeling the heat. You're feeling the heat. You're feeling the heat. You don't close it. You can see a little wick of a bar. You're hoping and wishing and hoping. Wishing and hoping. Oh no. Wait. Oh no. You know what? It's just gonna go a little lower and it's gonna bounce. I know it's gonna bounce any second. Oh, there we go. We're back in the box. I feel better. Oh no. Oh dang, it just nailed my stop. Dang it. Dang nabbit. Hope trades will kill you. Hit the close button. You can always get back in. A little 6-tick loss is nothing. You can make that up tenfold in the next trade. Don't worry about it. You got to take your lumps, take your loss, because here's what's happening psychologically. If you didn't get out, when the market came back down here to give you the real trade entry, you're getting popped down here and you're licking your wounds on a full stop out. Are you thinking about jumping in after a full stop out? Huh? Is that the first thing that comes to your mind? Well, hey, maybe I should just get reboxed and get right back in here. No. You're trying to deal with the fact you took a full pop. Hit the close button. Don't move your stops. You don't have time for that. Close button. Dump it. It's not working out. Get out of it. There was a lot of chance to get out in that box, Paul. I mean, you got popped on the trade to get in around 717 and change, and then it dinked around in here all the way until 721. It sat in this box for like 3, 4, 5 minutes. There was plenty of time to hit you can't say, well, I don't have time to think about hitting the close button. I mean, come on, it sat there for like 4 minutes. Hit the close and then cry? No, don't cry. Well, we're all big people here. Trading is serious business. We're not playing around here. We're here to make money. We're up against sophisticated computer programs. We can't think around about it, okay? You got in a bad trade, you get out quickly. That's how you trade in the long term and stay in this business, right? You took your pop. Here you are, 725. It's like 10 minutes later. You see it binking off of line 2. We're still in the room. We're telling you to buy this. That's helping you out, right? Telling you to buy it, and then ba-boonga. Up she goes, and you get a nice trade. So you could make the case that this was 2 and this was 3. That was 2 separate trade entries, one that didn't work out. Okay, so still counting 1, 2, 3. Now, where's the next one? Where's possible trade entry number 4? If you said right here, you are correct. So where are we on the count? 1. Here, let me take this little silly thing off here real quick. 2. Didn't work out. 3. Worked out. 4. Right here. Okay, let's keep going. That trade worked out quite nicely. We took that in the room. I actually took that trade. So we're long. Here's another trade right here. long, bouncing off band 2, going a little bit below the mid band there. Is that 6? 7, right here, mid band trade. 8, right here. You see him? Are you starting to see him now? And then we're out of time. So the number was 8. You said 8, you were correct. I'll give you credit if you said anywhere around 6, 7, or 8, because there's a little confusion about these two right here. So 1, 2, 3, 4, 5, 6, 7. 7. I'm sorry, 7. Okay, 7. All right, cool. Well, this was after the line, Ben. We can't count this one, okay? It was between this one and this one. Let's look at how much you would have made just on these two trades here. Let's take the first two and just do a quick little summary, and then we'll wrap up here. So let's say on trade 1 you were filled around I don't know, 91 even. Let's use a round number just to make this easy. Got to 96.70. That's 57 ticks. Trade 2, you got filled. Let's say, let's make it real easy, 96, and maybe this is one. Maybe you got out at, I don't know, 130. So another 43 ticks. 93, well, almost 100 ticks. Trade 1, trade 2. So if you make 100 ticks on a Russell trade, how much is that worth? 100 ticks on a Russell trade on 2 long trades. This could have been 2 trades. This could actually have been from down here to here and with a re-entry here. This could have actually been 3 separate long trades between here. So just 6:58, 7 o'clock. You were done trading by 8, about an hour. Yeah, $500 per lot. Yeah, 2 lot you would have made right around 1,000 less commission costs. So let me go back here. Let me see and check the numbers. Let's see who gets the gold star. I'll give a gold star to 6, 7, or 8. So let's see who got it here on our long trade Russell count. This is a good exercise. I hope this helps you when you go look at the market tomorrow morning. Hopefully you'll be able to visualize these, right? That's why we do these little exercises, so that when you see live data coming in and you hear some calls in the room and you're looking at your chart, you're starting to perk up a little bit and you're saying, hey, okay, Paul had a 6. I'll give that to you. Dave had a 6. I'll give that to you. Bill S had an 8. I'll give that to you. Roger was 6. Good. Paul said 6 or 7. Okay, I'll count that. Michael, 7. Byron, I'll give 8. We'll give that to you. Good. So big handful. You got it. And the rest of you were pretty close. So I'll just give everybody gets gold stars tonight. Excuse me. Okay, let me hit the stop record button. Any final questions before we wrap? Anything you want to ask before we